On top of this, we have had 3 stages of bullish momentum from Asia into London, and now finally looking for possibly a rejection in New York. Okay, so as you can see here, we have taken out the high from London. We have created a high here. We've closed back inside for for both of these highs here. We've had a nice clear rejection candle with nice price delivery behind this. You know, we would have seriously trapped a lot of traders up high here at the moment. So people basically going long from here due to this large momentum candle here. We are at this area of support at the 75 level, looking for either 25 pip to even a 50 pip trade opportunity. Now, when it comes to this trade here, I want you to just take a step back and really just view the patterns in front of you, okay? You know, dollar yen has been doing the same thing for the last 2 days. It has been coming up to a high and it's been breaking down. It has been coming up to a high and breaking down. It has been coming up to a high and it's been breaking down. Coming up to a high, breaking down, coming up to a high, and what can we expect from here? Breaking down. And in our system, it makes a good opportunity to look for an overall sell. Now, when we look at the hourly chart, what we can see here is that we've also had 1, 2, 3 bullish candles up into the high. We've had 1, 2, 3 in Asia. We've had 1, 2, 3 here at London. We've had 1, 2, 3 here at New York. We had 1, 2, 3 here at New York yesterday. We had 1, 2, 3 here during the dead hours between Asia and London before this smaller correction took place. All I'm doing is following the sequence of patterns that are in front of me, combining that with the knowledge I know about using the breaker system itself. So getting, you know, a pull or a push below this candle here would be ideal for us to start then looking to manage the trade. Otherwise, we don't need to do anything unless the market closes back above this level. It's the new hour. That is the first 15-minute candle of the new hour. It's time to look for that potential selling opportunity, especially if we can break out of this momentum like we have during London. Even a 25 pip movement down to the previous daily's high would be ideal. Okay, so we are finally seeing a little bit of volume coming into the market. You know, we've had that upside down V or A formation, whatever you want to call it, finally breaking these lows. We stayed below these previous anchor points. Okay, so we can see here, look at how well these anchor points are holding the market between this one here to the left hand side, where we can see lines up with here, and this one here that lines up with here. And now we're finally seeing that market dropping, continuing the pattern that we talked or spoke about at the very start. Break up, break down, up, break. So even if we could get a target to roughly around here, that would be great. Okay, so just going to basically close out the trade here at the moment. Now, the reason for this is when we see such a strong 5-minute candle like this, usually what I expect is this market to pull right back up to where we originally executed. And with that, basically, I can now take some of my risk off the trade. And, you know, if the market runs away, okay, no problem, I've made money. But if it pulls back to somewhere around my entry and I can get in a second time, well, then we're able to actually get the whole move or extract as much as possible out of the move. Now, the reason why I have confidence about this as well is because, you know, if this market was really going to run away straight away, what we'd see is this market breaking this low straight away and just continuing. Okay. Very rarely, you know, will we actually just see the momentum starting to switch, which tells me that we may have danger below this level here, coming down, taking this level out before moving up higher, scaring traders out before moving down lower again, and then possibly continuing with this pattern that has been developing over the day. Okay, we don't know, but this is just the story, for example, that we're building. Now, if we look on the 1 hour chart, we can see that this market is slowly breaking down. Now, if you look down here at the time, we have 10 minutes until this hourly candle closes. So when we start combining the time with where we're at in the market, we can start understanding what possibly might happen here. For example, if this candle is broken down to 15-minute chart, it's a large momentum candle. Well, if we are sitting at this level here and there is still 10 minutes for this 15 candle to close, well, then there's a large possibility that we may see a pullback up here. But not only that, that then the 1 hour candle may have to put a wick in place at the high to see a further move to the downside. So when you start combining all that information together, things start to make more. Really nice engulfing candle here, clear rejections of our anchor points, and yeah, overall really nice trade. Now I'll be managing this from the ACMA here, and kind of looking at this anchor point as well, combining these two metrics together to make sure that I'm staying on the right side of the market. You know, another thing that we can look at here, although I'm only expecting a more shorter term correction, another thing we can look at is how this hourly candle is closing. And if we are working off patterns in general, what we should be looking at is, well, what can we expect at the high of the day when we see a large impulsive candle like this, an almost kind of hammerhead or whatever you want to call it, hanging man, I'm not too sure, with the terminology doesn't really matter, and we have this long tail. Well, you know, we can go and look for similar kind of candles like here or like here where we're at the high with a momentum candle, long tail, and look at what to expect. How does the next hourly candle react? How, you know, how far did the move happen around these similar times? Simply go through your charts and ask yourselves these questions. You know, here we can see it again. You know, this kind of long tail. Well, you know, we never crossed the opening price. Okay, well, you know, take all that information, build a database, and next time you see this, you can kind of come back and say, well, you know, we didn't actually do that here either. So maybe this candle is still valid. So, you know, it's about building the story of the information the market is giving you, because that's exactly what the market is doing. The market is giving you information to play with. And it's how you use it that, you know, is what matters most. So let's just have a quick look here. So far, it's not too bad. You know, I'd like to see it breaking this low now. But I will, since I've taken profits already today, move that to break even. And now we're just simply managing this trade nicely. So for me now, it's just about managing each trade, or sorry, each 5-minute candle. So when we kind of get to a stage like this where I'm just kind of managing aggressively, I'm looking at each 5-minute candle. So I'm jumping between the 15 minutes, the 5-minute chart. I want to see lows broken. I want to see momentum coming behind this. And yeah, simply just managing this now with the 5-minute chart.